Hey guys, Mike here. So, we squeaked out a little bit of victory on the S&P to break the 5-day losing streak, like I told members in their news brief this morning. Going 5 red days in a row, it's not common, and so whether it be 6, whatever, you're going to get a slight bounce. That's just the way it's going to be. When you get this oversold right now, on so many different stocks and things like that, I mean, it's just natural to see it. And, in this video, what we're going to do is touch on one thing that if it happens, I don't see the market responding too well and holding up too well. The other one's going to be looking at more of a broader picture to kind of take a look back at what you're looking at for 2023, and why you shouldn't be surprised this is happening, right? And I'm going to show you why. But right now, I do want to say this, and I'll start off with this. Good job, EU. You do something we do not do in the United States, and hopefully, I keep seeing all these headlines about you guys going after those big mega cap companies like Meta, Google, and things like that. And you can see right here, Meta Platforms is hit with a formal complaint from the EU antitrust watchdogs for allegedly squeezing out ad rivals by tying the Facebook marketplace to its own social network. Because in our country, these companies own our politicians. I mean, our politicians own God knows how much stock in these companies, or maybe they're even giving it to them. And then when they leave office, they probably go to work for them, being a lobbyist or something. But, over there, at least y'all are trying. And I see you doing it with Google and Microsoft and stuff like that. So thumbs up to you. I wish we would do a lot more of that here, but instead we just give little piddly fines, which is about 1/10 of what they make when they're committing their crime, and if that. And we don't hold executives accountable in this country, unfortunately. But kudos to you, okay? You are doing that one right. So, going into some of the data that's coming out here, you're looking at housing. Oh boy. Housing market index fell to 31 versus 34, so not even close, right? Index at risk falling below COVID lows now. Good news is the NAHB chief economist notes that we may be nearing the bottom of the cycle for builder sentiment. I mean, it can only go up from here, I would think. And then if you look right here, I mean, this is the National Association of Home Builders Market Index, and you can see right there, right, and there's the COVID lows, so we're getting ready to probably pop below that, and it can go a lot lower. I mean, I don't think we're going to 08, but you never know. Some people are calling for that, and so that was in the 90s, but it can definitely go lower. That is for sure. And the other one to really look at here too is this is the U.S. Federal Reserve's Bank of New York's weekly economic index. Okay, and I'll tell you exactly what that actually is in just a minute. But as you can see, it continues to decline, which is not a good thing. All right. And we're about to cross that little line right there. Last time we did it, obviously, we shut down the world, of course. But it declining is not a good thing. What this basically measures in a nutshell is one of these main indexes. It has 10 indicators of real economic activity scaled to align with the 4-quarter GDP growth rate. It represents the common component of series covering consumer behavior, which we know is in the toilet, the labor market we know is tight, and production, which is not good at all right now. And that takes us into this one. This hasn't happened in a long time, right? So investors are net OW bonds for the first time since April 09. And I know everybody, like TLT bonds, you name it, I mean, are piling into this right now as a safe haven. And because obviously the yields are up and stuff like that, so they're locking them in. But it's been the first time since 09. I mean, that's crazy, but that shows you the run we've been on. And that takes me into this chart I'm fixing to show you that came out today. And I was listening to an interview about this last night, which I'm going to touch base on as soon as I show you this chart. And when you look at it, this is S&P 500 buybacks, rolling 4-quarter sum in billions, right? So what do you see, right? We got Q1, Q2, Q3. This is updated through September 30th, 2022. So we don't have 4th quarter yet because it hadn't ended. But when you look, you see kind of a pattern form you've seen in the past. And that is, it's looked like it's trying to roll over, right? And we've seen this before. Where do we see it? We saw it right there in the 08 crash, right? When things started getting bad. You can go up to 2018, 19, going into 2020, it rolled over. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And the interview I'm referring to, it was yesterday, and this gentleman was talking about Apple and how you're starting to see weakness in Apple now, right? But what has Apple been doing? All by themselves to hold the stock up. $100 billion in stock buybacks this year. Let that sink in. $100 billion. One company in 1 year. You know how many companies only make $100 billion in revenue total? They did that buying back stock You know how much that's held this stock up? Imagine they weren't doing that, right? This whole year, what would be happening, right? So it hadn't been able to fall. And the reason why, this gentleman made a great point is, and he didn't say this, but I'm going to say this, is that the capitulation moment, right? Is not going to be a bank going under or something else happening? Is it going to be Apple falling? And I say that because this stock has been allowed now to, in a lot of ETFs, make up 20% of a bunch of different ETFs. 7% of the S&P by itself. I don't know what's the weight in the NASDAQ at this point in time. It's a lot. By itself. That's the main general, right? So if that general falls, I mean, just down to, let's say, between 100 and 115, just that far, right? What does that do to the market? Does the market really start panicking? And so, oh my God, and then Microsoft's another one that really hadn't fallen like all the other ones. Google's fallen pretty good bit. Obviously, Netflix was crushed. Amazon's been getting crushed. And I mean, all of them are like setting new 52-week lows. But there's Apple, and even Microsoft, but Apple in particular, right? And so if those stock buybacks, if Apple's one of those ones that decreases their stock buybacks, or other big stocks like this who've been doing this, stop buying back as many shares, well, what happens? Especially if we hit rough times. And so, and especially going into next year, because I believe, correct me if I'm wrong, I didn't look this up, but I remember, but I don't know if it got finalized, the 1% tax going on stock buyback supposedly. I don't know if there's a loophole to get out of this. There usually is by the politician where it makes them look tough, and then there's some kind of loophole they put in because these companies give a lot of money to their campaigns, because now, like the Supreme Court said, they are beings. They can give they can give money to campaigns even though they can't actually vote as a company, but they can still give up money. And so we'll see how that's also going to affect it. And maybe, I don't know, maybe that's why it's going to go down. We'll see, but it's not a good thing. It's not a bullish thing for all of a sudden, oh, wow, they're going to stop buying back as much stock. So that's something to keep an eye on when the fourth quarter reports. Did it continue to roll over? What happens in the first quarter? That's going to be key. And another thing I want to touch on, this is the bigger picture, right? So take a broader view of like, what are we seeing right now? What's been happening? Okay. And if we go in the monthly view, we're going to take a big view of this. We ended up obviously having 2 months green, and then now we're selling off in December. Now, why was I not surprised by the 2 months green? Well, it's because of a video I gave you guys and did for you back in September, right here. And I said, kiss of death confirmed. There it is, right? Played the video for you. And those who forgot what the kiss of death is, it's on the monthly. You got the 21 EMA right there. The stock drops down, it comes back up, it does a kiss, which is the green right there, and it comes down, and when the next red bar, this is the death part, breaks the low of the original candle that had fallen down before the kiss, right there, that's your death, right? And so I showed you this right here, and I want you to pay attention to what I told you and why I'm not surprised. There is multiple years that this has actually happened. But here's the one thing that's really common with all of these scenarios, right? This is what we're going to look at, and pay attention to this, because this is what I want you to take away from the video. You can see, yes, when you get the kiss of death for the long haul, it tends to sell off quite a bit. But look what happens in the short run. We came down, we broke, we moved up. Now I want to go into the daily to show you this run up. It may not be huge, but this is the S&P, and this has to be on the S&P. You can see popped almost 9% in a month right there, which is a pretty good move for the S&P on a regular time frame, right? Look at 2000, the dot-com bubble, 2001 right there. You see, we sold off a little bit more once it was claimed, about another 13%, but then look at the run it took. We'll go to the daily. Look right here. We sold off a little more once the kiss of death had been confirmed right there, I think 15%, but then look at the move back up. We ended up moving up almost 16% in 56 days. And so, yeah, it's amazing how past behavior predicts future behavior. It does work. The market does not, repeat itself, but it certainly rhymes. It gets very close, right, to happening. It just doesn't all look the exact same. And so I was looking into this for us, what's happening now, and then look back at the other extended bear markets. When I say extended bear markets, I mean like you got to be more than 3 months, okay? And so now we're definitely in an extended bear market at this point in time. And so you go back and you compare it to, 08, 01, 76, 69, those kind of things where it's at least a year or more, right? And so, because we've seen, a bear market can be 30 days. How about that? But there was also something, I want you to pay very close attention, I'm going to point this out, that I discovered. And this is what happens when you look at past charts and compare them to future charts and all this stuff. Again, don't mean it's going to repeat, but it sure looks like it's rhyming. And so far, this is playing out. And if all the earnings projections play out as supposed to in the fourth quarter and first quarter, then this should play out as well. But I'm going to point out what I showed you to kind of see where we're at and really how far we could have to go in this thing. And so I got all three of these side by side for you. This is obviously where we're at right now, right? We had the kiss of death, boom, and we had this move up, and now we're selling off, right? We're trying to fill those gaps and all that fun stuff. Well, here obviously is 2008's crash. We had the kiss of death, and then you see what happened when we had that rally. It just absolutely cratered, right? We had just a massive drop. I'm not sure I expect that kind of drop because that was, I believe that was the Lehman Brothers moment in 08, but you can correct me if I'm wrong. And then in 01, you really didn't have that. It just kind of fizzled down, which is kind of what we're doing now, right? And so you had the kiss of death, boom, it sold off, rallied, sold off, rallied. But here's what I want you to look at. Look at the RSI on the monthly. Barely broke 50. That's where we're at. Barely broken 50, right? We're a little bit lower than that for the rally. But look at the other two. Oversold at the bottom, oversold at the bottom. And I thought, okay. Well, what happens when we go back when we look at other extended bear rallies like we're having right now? Well, you go back up here, and this is the 70s, we were fighting inflation, right? The kiss of death happened, boom, boom. Then you get this massive sell-off. Oh, there's the RSI. It's oversold. That was the bottom. That signaled the bottom for you, right? And then when you go over to right before that, it was going to be 69 to 72, I believe. That's what this is. And this was a 583-day sell-off here. And you can see what happens. It's oversold, right? It had the kiss of death, boom, finally sold off. And so that was 4 other bear markets, 2 which included a fight with inflation. And you see where the RSI was, right? It was, some of them were extremely oversold. And we're just passing the 50 line, right? And when we usually pass the 50 line, that's a bearish sign anyway. And so that's what we could have to look forward to. And, you know, and of course, put that on top of the kiss of death when it normally plays out. And I've showed you multiple, and go back. I'll link that video at the end if you hadn't seen it. You look at that. And that's why in that video, instead of doing a scare video for you, I said, this is what I want you to pay attention to. Look what happens. And we got the rally, right? And so that's why you don't have to be shocked or anything about it. And so, you know, that's what we got to look forward to. Maybe, I mean, at least let you kind of take a real view out and you look at a monthly chart, the big picture, and go, woof. And that could be rough, right? I mean, if that plays out. And so far, it's playing out. We have to see how the December candle obviously plays out. And then going into January, February, I'm putting out a video. It'll hit before this one for the members about January, February in bear markets, just covering bear markets, okay, and telling them exactly what we got to look forward to. You know, I mean, that stuff's important to know, and it kind of lets me be at ease at least to go, okay, this is how this should play out. It might not, right? I mean, again, year of first. That's what we're in. We're about to go into another year, but right now it's been a year first, right? And so that's where we're at. Now, earnings-wise, I know Nike just reported they beat top and bottom line. FedEx beat top line, I believe, and then missed bottom line. Still waiting on the earning calls, and I didn't even see like major movement either stock right now. And I mean, FedEx already has some huge moves down anyway, but we'll have to wait for the calls, which will come a little later and stuff, and see what they have to say, because obviously Nike's global, FedEx is global. What are they seeing, not just here, around the world? Right, and especially FedEx. I mean, it's a holiday, right? If we're shipping stuff, you're gonna know it. Okay, I'm not sure if people buy Nike shoes for other people. I don't know about that one for the holidays or how this December goes. But tomorrow, you know, we say here we got Carnival Cruise Lines going on, and then we're gonna have Cintas. There'll be more about the labor right there, and then of course Micron. And this is gonna affect, you know, I'd probably affect all semiconductors. Let's be honest. I mean, when each one of them report, they usually either bring people down or push other stocks up. And so I have those in the morning, and hopefully more details on Nike and FedEx as well. As the market right now, it's just struggling, right? I mean, one thing I was sharing, I always put in the Discord and stuff, is the amount of puts and where they're at and the calls and everything coming through. And one thing you see is a lot of 2024 leap calls for Apple and other stocks like NVIDIA and all that. I think Apple is around 120 was the strike. And so, you know, that's what, and then we're talking about big money, like millions of dollars, right? And that's how many block orders and stuff coming through. And then right now, of course, one thing that's been coming through a lot, what came through last week and it's playing out this week was the big money putting puts in, right? Buying a lot of puts, right? And so they've made a lot of money on those this week, right? And so that's what we got to look forward to. But it's funny seeing those 2024 leaps come across like they did because you're like, I mean, that kind of lets me know, especially with the strikes they're doing, they're not expecting some great, especially first half of the year for these stocks and stuff. So again, we'll have to watch it play out, see how it goes, see over from the 24th to the, I say 23rd to the 2nd of January, if we're going to be getting coal in our stocking or not. We'll have to see. But understand, I'll say this and I've done the research for this, is why I know if a 7-day rally is going to happen here at the end of the year, and you can always usually bet on greed, but if it's going to happen, it's going to be fast. Right, you're going to be probably shocked if it does happen. I think most people would, especially where sentiment is now. But again, look at the charts yourself. You can see on the daily, on the hour, there's so many stocks. They're so oversold right now. We're actually in fear on the fear and greed index. I actually monitor and stuff. So when that happens, big money likes to have fun. So anyway, hope you guys have a good one. And sorry I didn't put out a video yesterday, but I was stuck in traffic for 4 hours. Because the city I live in decided they wanted to shut down half the interstate and half a major bridge to do road construction. Way to go during holiday travels. Anyway, hope you guys have a good one, and I'll see you tomorrow.